Welcome to Money Making Sense, the show that talks about all things money. We are still doing the 10 tax tips series. And joining me today is Erin Koller. You are with BDO and you're a tax senior.
Yes.
That means you've been doing taxes for 150 years.
I wish. No. It's about 3 years.
Yeah. 3 years. Okay.
So
I'm pretty sure it feels like 150 during tax season.
Yes, right now it does. And it feels like there's still 150 before April 15th.
Before it goes. Definitely. Well, we are actually going to talk about dependents and how I can write them all off, right?
Yeah, well, so dependents can help you reduce the amount of tax you end up owing in a couple of different ways.
All right, I'll stick with that. So first of all, that changed. Last year was the first year under the new tax code that President Trump had put through. And so it's a little bit different on how we claim our children now, isn't it?
Yes, that's right. So before it used to be that the main reason you would want dependents, or the main benefit that they offered, was as exemptions, which means they would take the amount of income you're taxed on and reduce it.
Okay.
That is gone now. There are no more exemptions now because of the Tax Cuts and Jobs Act.
Well, then I got to get rid of my kids.
Yeah, yeah, because now they're just a drain.
Exactly.
But they did try and make up for that by increasing the child tax credit. So what that does is, instead of reducing the amount you're taxed on, it reduces the amount you actually owe at the end.
So if I owed $8,000 to the IRS and I have one child, how much will that reduce that $8,000?
So the child tax credit is $2,000. It can be phased down as your income goes up. Oh. So yeah, but I
don't make much.
They've increased that so it doesn't hit most people. It doesn't hit me.
Okay.
If you're married and your income is more than $400,000, then that credit's going to start to go down.
Okay.
But if you're married and your income's less than $2,000, $400,000, or you're single and your income is less than $200,000, you're going to be able to take that full $2,000.
Okay, so what if I only owe $1,000 to the IRS, but I get a $2,000 credit? Is the IRS going to give me back $1,000?
So a portion of that credit is refundable, and it's refundable up to $1,400. So if you owed $1,000, they would say you have a $2,000 credit, but only $1,400 is refundable. So $1,000 of it would reduce your income or your taxable income, but then you'd have $1,000 left, and since that's lower than the $1,400, you would get the full $1,000. But if you owed nothing, and you had that, then you'd only get $1,400, not $2,000.
Okay, so that would be like I owe $10 to the IRS. So I owe $10. I'm not going to get the full $2,000 back. I'll only get $1,400 back.
Yes,
okay.
That's right.
Gotcha. Okay. Well, I'm divorced. And we split the kid. Half of him lives at no. But we do have to share custody. Mm-hmm. So who gets to claim this $2,000, or do we each get $1,000?
So only one person can claim a child or a dependent. So a lot of times people will negotiate that in their divorce, and it'll be in the settlement or the divorce decree. It'll say, I've seen a lot that say, one spouse gets them on even years and one spouse gets them on odd years. Or maybe if they have two kids, it'll say each spouse gets to claim one of the two kids.
Okay.
If you've been divorced and you haven't discussed that and you haven't agreed on it, then the person who has the main custody, so the custodial parent, is the one that's supposed to claim them.
Okay. So what if we are doing it every other year? We've agreed to this. Mm-hmm. How does the IRS know that it's the correct year for me to claim the child?
So the IRS is just going to trust you unless two people claim the same child.
Oh, okay.
So let's say you and your ex both claim the child, then they're going to say, oh no, this social security number has been used twice. This can't, we can't do this. And then they'll come back and probably disallow both of you.
So you don't have to submit a separate form saying this year this kid's mine, and and then the next year the other spouse submits a separate claim going, oh, this year this kid is mine to get the credit.
No, you don't.
Okay. Oh, that's pretty simple. All right.
Yeah.
What else about kids and taxes do we need to know about on this under the new tax law?
That is a good question. So an important thing to know is you could claim a child as an exemption until they were 19 before
Under the old tax law. Yeah.
Since there's no exemptions now and it's a credit, the ages have changed a little bit.
Oh.
So the child tax credit only counts until the year the child turns 17, and then they don't get the child tax credit anymore. So if your child turns 17 on December 31st, you don't get the tax credit for that whole year. Yeah, but to sort of help and make up for that difference, they have an other dependent credit. Now that one's only $500.
Okay.
So it's not the full $2,000. And that one works for dependents you can claim that are over the age of 17, that are 17 and older.
Well, how old does that one go, or is it forever? Is it for somebody who, maybe a child that has some type of disability that can't go out on their own and work or something?
Yes, so that one applies to anyone who can be claimed as a dependent, and there's a lot of different rules for how that works. If it's a child, you can claim them as a dependent up until the year they turn 24 if they're going to school.
Okay.
If they're not going to school, you can claim them until the year they turn 19. So
As an other dependent.
As an other dependent.
Okay.
Yeah, and as well as you can claim anyone who lives with you if you provide more than half their support, they live with you, and they make less than $4,200
So
a
I need
year.
to get my mother in my house so that I can start claiming her as an other dependent.
Actually, your mother could probably still qualify, even if she doesn't live with you, as long as you're still providing half of her support. So let's say she needed to go to a nursing home and you're paying for the nursing home and she has no income, she can qualify as a dependent.
Yes, I can go stick her right into the nursing home. I don't even have to get her into my house.
Yes,
All right.
you'll save $500 by spending all that money on a nursing home.
Yeah, definitely. Okay, what else, Erin, do we need to know about this?
Other things to note, there, for Utah specifically, since we're here in Utah, there is not a child tax credit. But Utah does still allow some exemptions for those dependents that qualify.
So is that on the state tax form that we fill out?
Yep.
Okay, if I was receiving a credit on the federal form, not in Utah, if I'm in some other state and I get this child credit, can I also claim a credit on my state taxes as well?
So an exemption is
exemption?
different. Yes, you can claim an exemption on your state taxes, and you can claim a credit on your federal tax.
But
in fact, you have to claim the credit on your federal, or you have to qualify for the credit on your federal taxes and claim it there in order for it to be an exemption.
Okay, but
on your
Utah doesn't have that, you were saying. So Utah does not.
They don't have a credit, but they do have an exemption.
Oh, they do have the exemption.
So that reduces your income. So you know, let's say you're going to owe 20% tax. You'll owe 20% tax on a little bit less versus the credit that says you'll reduce the $8,000 of tax that you owe.
Okay.
Yeah.
All right. Well, cool. All right, Erin Koller, you're with BDO and you're a tax senior. So thank you so much. If I have issues with my child and claiming them or trying not to claim them on my taxes, I'm going to come to you.
That sounds great.
For everybody else, if you need to go to UACPA.org to find the accountant who's right for you.
Thanks for being a Money Making Sense listener. Follow your common sense on the social media. Money Making Sense on Facebook, Twitter, and Instagram.